You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again for TWIFO, This Week in Futures Options, the program here on the network where we break down everything going on in the futures options realm. What's going to make it on the show? We don't know. You got to tune in every week to find out. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting network upon which so many of you are binging, coming off the hottest month in the history. 15-plus year history of this network. Yeah, we've been doing this podcast thing for a while. So that's saying a lot. Folks are clearly interested in this space, and we could argue that your reviews out there, your ratings and reviews on all your on-demand platforms, more important than ever as more folks discovering this content all the time. They rely on your reviews to do so. So the newest stuff, the newest reviews, more important than ever. Wherever you're listening, please make sure you keep rating and reviewing if you like what you hear. And of course, if you want to go above and beyond, you want to get more content in your life, you want to join us live for this show, everything else we do throughout the week, you want to get access to exclusive pro Q&As and a whole bunch more options, oddities, giveaways, theoptionsinsider.com/pro is the place to go to begin that journey to the dark side. And let's see who's joining me on the TWIFO journey today. I am pleased to say we have our old friend, Mr. Dan Gramza from Gramza Capital Management, holding down the CME Group and FTSE Russell hot seat. Mr. Dan, welcome back to TWIFO, sir.
Well, thank you very much, Mark. I'm really excited about exploring these markets. We got a lot going on today, so it'll be fun to take a look at them together.
Yes, you picked a good day to come on, Dan. There's some stuff happening, so let's get into it. It is time for the movers and shakers.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report. This is indeed the portion of the show where we break down what is lighting it up to the light side, a.k.a. the upside, and to the dark side over there at CME this week. Mr. Dan, you know the deal by now. Where should we begin our journey this week, to the light side or to the dark side?
I'd like to start with the light side.
It's kind of a 50-50 coin flip this week, Dan, because if you look at the report, listeners, you guys can find it. We tweeted out right before showtime. CME Group also tweets it out if you follow them on Twitter. You will see that it is almost evenly split down the middle, green and red. I haven't seen this in a little while. We've usually been biased in one direction or the other. This week, it is very much a 50-50. You can easily do a top 10, even a top 15, or depending on which side you're looking at here. So a lot to parse, but I'm sorry, Dan, I got so distracted. You say light side or dark side?
Well, it is interesting. You're right. The way the market's reacting, that even split. Yeah, you usually do have a bias, but let's take a look at the light side.
Okay, to the light side we go then. All right, and number 5 coming in on the light side this week, listeners. I've said it before. I'll say it again. There are 3 frequent offenders that usually percolate into our movers and shakers. They are NatGas, they are Bitcoin, and they are lumber. Let's see if we can find any of those. It's kind of like a Where is Waldo in our movers and shakers this week. Number 5 is not it. It is Brent, up 4.5% this week. Number 4, soybean oil, up 6.2%. It was number 5 in the other direction last week, off just a tick under 10%. So rocking couple of weeks for soybean oil. Number 3, there's our first of our frequent offenders here, the first of our trifecta, that is lumber, up 7.73%. It was number 2 in the same direction last week, up 5.18%. Number 2, back to the beans, soybean meal, up 8.41%. And number 1 is oats this week, up 10.32%. Interesting, before you get excited about oats, not a big options player. They do 5 contracts a week, maybe. So not a lot to analyze there. Now to the dark side we go here. All right, there we go. To the dark side, we have number 5, silver, off 4.15% this week. Number 4, back to one of our frequent offenders here, back to the trifecta. It is NatGas, off 4.6%. Number 3, class 3 milk, off 6.63%. Number 2, the final leg of our trifecta, it is Bitcoin, off 8.83%. It's been a little while since we've had all 3 in the movers and shakers. We usually get 1, oftentimes 2, but 3, it's a rare occasion getting that again this week, off 8.83% for Bitcoin. And number 1 to the dark side this week is heating oil, off 10.86%. Dan, we have a pretty broad spectrum of products to choose from this week. So what's capturing your fancy? Where should we begin our journey this week, sir?
Well, there's a few of them that I think is really surprising. Yes and no in a way. And that is, if we start with, how about NatGas?
All right, we can do that. To the energy we go, listeners.
It's time to tap into the deep options well of black gold, Texas tea, NatGas, and more. It's time to talk energy.
All right, listeners, welcome to the energy segment. You guys know where to begin your journey. CMEgroup.com/TWIFO, TWIFO is the place to go to begin that dark side journey. Once you're there, you will have a choice of your asset class. We're going to go down 3 slots to energy. You're going to go over 3 more in the product family to natural gas. And right at the top there, you'll see natural gas on the top of the list. That is where we will begin our journey this week. Mr. Dan, obviously natural gas a little bit lighter than it was the last time you and I chatted coming into showtime. It's at 5.43. We have a 5 handle again in NatGas, listeners. It's been a little while since we revisited these levels. Mr. Dan, a lot to unpack. What is lighting up your tape in natural gas this week?
Well, what's interesting about it, Mark, is that you would expect it to be a lot higher. When you look at global demand, when you look at global supply, you would think this would be trading easily above $9 to $10. But we're not seeing that. And we do have a facility down in Texas, a NatGas processing facility that creates LNG, which is what we use to ship to other countries. They just get it very cold and under a lot of pressure. and those molecules stop bouncing around as a gas and they become a liquid. Well, that facility is offline right now. It also means we have more supply domestically. About 70, actually, it's more than that now. Probably closer to 90% of our LNG exports are going to Europe. But we also want to remember that LNG is still flowing in Europe. So NatGas through the pipelines, although some countries have backed off and have changed things and said, no, we don't want any more Russian NatGas, but it's still flowing to many places yet. So it hasn't totally stopped. So the squeeze that people are anticipating hasn't totally happened. And if you're Russia, you don't want it to stop because that's a source of revenue. If you look at the Ukraine, that nat gas that flows through the Ukraine generates about $1 billion in fees for Ukraine. They get paid as that nat gas flows through their country. So it's a very interesting market to me. I keep waiting for a bounce that would be sustainable, but we haven't had that. If you look at just this month of June, every rally they've sold into it. And sellers have come in with both hands. You don't see that on the buy side. You may have 2 or 3 days up and then it crashes again, like we're seeing right now. We had about 3 days up and it's down today, that 5 handle that you mentioned. Really surprised to see it here. But I think for us to monitor here, let's think about some of the things that you want to see if you're on the short side. 510 to 5 even is where you're looking for. That would be the next objective, and you want to see that on Friday. What you don't want to see, though, if you're on the short side, it's on Friday for this market to trade back up above 610 to 620. If we close in that range, then that would imply an update on Monday. That would be a fairly dramatic move for this market, and typically you would expect further movement to the upside. So right now, we would expect weakness going into Friday's action. How Friday behaves and where it closes could give us some pretty solid clues about Monday's price action.
Well said, sir. Let's get into that action out there in NatGas right now. Like I said, 543 coming into showtime, off about 85 cents or about 13.5%. So as Dan mentioned, that kind of continued, somewhat maybe perplexing to you out there, listeners. Downside continues in NatGas after we were just flirting with the 10 handle not too long ago. A couple weeks ago, we were talking about all the action and the 10 calls and everything else like that. Now we're back at a 5 handle, listeners. Crazy times out here in NatGas. Let's see how much paper is on the tape this week. 330,000 contracts. So actually a somewhat light week. Usually we're around 400,000 contracts this time in the week. So a little bit lighter on the NatGas front, as I guess folks are settling into the fact that we are drifting back to the dark side. In terms of the paper, of that 330,000 contracts, 37% coming in the August contract that has 26 days to go. So we're going to hang out there. What is the vol right now in that front month NatGas contract? It's about a 66. Listen, it's up 3.2 points on the week. So actually getting a little bit frothier here this week. Skew-wise, we had the puts last week. No one really cared about them. They were 1.2% cheap. This week, 4.8% cheap. So they're getting cheaper. So as we continue to blow through put strikes to the dark side, it makes some sense that those put strikes would come in. If we were moving even more aggressively down, then perhaps we would see those get a little bit up. But it seems like folks are getting a little bit contented with this downside move. Let's see. The calls last week, 3.9% cheap, or excuse me, 3.9% bid. So folks were thinking, maybe some folks think we're going to bounce. This week, 7.1% bid. So a little bit of action to the upside. Let's see if we can parse that a little bit, listeners. The most active contract this week in NatGas was the 5 puts going out in August. Those did 15,200 contracts this week. The big day is actually today, 8,600 today. So over half of that paper going up today. Outside of that, Monday, about 4,000, most of that closing, 2,000 on Tuesday opening, and then about 600 yesterday, kind of a nothing day yesterday. And then right behind that, we have the 6 puts doing 12,300 contracts this week. The big day for that was Monday, almost 4,000 on Monday, slightly biased towards opening. 3,200 on Tuesday, same deal, slightly biased towards opening. 1,800 on Wednesday and 3,300 today. So these have been active all week long. It makes sense as we were drifting towards and then breaking through the 6 strike. It makes sense that these 6 puts would be fairly active all week. In fact, it's just a put palooza out here, listeners. Number 3, we have the 5 half puts, 11,300 contracts. The big day for those was Monday, 5,600, 2,600 today, and then scattered paper the rest of the week. So interesting how we have different hot days depending on your strike out there as well. But we mentioned there was a bid to the calls. Let's see if we could see. It wasn't a ton of call paper this week, as you might expect. It was mostly a downside week. The 7 calls were the most active calls. They did 7,500 contracts. The big day for those was Wednesday, about half, 3,600 going up on Wednesday, 1,500 on Tuesday, 1,400 today, and less than 1,000 on Monday. Kind of back and forth opening to closing as well. So no strong bias there. There are only 4,500 of the 8 calls. So not sure what was going on to give those calls a much higher skew. Obviously, if you move downward, you should see the call wing rotate up a little bit. So that could account for some of that bid we're seeing in the call wing. But that was a pretty sizable jump. So intriguing stuff. Let's look really quickly, see if we can see any other paper. You know what, Dan, despite the fact that we're hanging out at a 5 handle, these 10 calls are still pretty active. You go out to September, 3,300 trading there, 2,300 10 calls trading in December, 5,200 in March of next year, and 1,500 in February of next year. So in spite of the fact that we're hanging out at a 5 handle, Dan, we're still seeing a fair number of 10 calls trading out into the future. Does that surprise you, sir?
No, because I think it gives us a good indicator. What does the market believe could be happening here? And as we get closer to autumn, to the winter season, Germany's already expressed that they're trying to build supplies so that if the Russian connection is shut off, they have enough to get through winter. So it's still a tenuous situation when you think about this coming the end of this year, this coming fall and winter time. It's going to be critical to see where these countries are in terms of building inventory and the ability for other countries to supply them, including the United States. So I don't think that's unreasonable. Getting up there by the end of this year, I think is a real possibility.
All right, Dan, our next segment here, we get a lot of action across the board where we got silver lighting it up here at number 5 to the dark side. We've had some interest in silver this week on the network, so perhaps we'll head out to the metals next.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the metals. Get into your drop down there, pop out at energy, then we're going to go down the asset class all the way to the bottom to metals, then we're going to hang out in precious. Then we'll decide where we go from there. Mr. Dan, what is lighting up your tape in the world of the shiny stuff this week, sir?
I don't think it's too shiny. It's
you're right.
Not shiny.
The
like
luster has come off a little bit.
Yes, the luster has come off. It's both gold and silver. They are lackluster. Even gold today is kind of holding its own on the lower edge of a trading range. We've had silver penetrated through that by getting below 2040. They're around 2028 right now. Here's some things I think to think about. First, these precious metals, and silver's a good example, just hasn't reacted the way it typically is expected to do. In other words, this is supposed to be a store of value, that in times of uncertainty, you put your money in precious because it'll hold value no matter what happens. Well, a war in Ukraine, that's created some uncertainty. Inflation's another reason capital will flow towards precious metals. Well, we have some inflation, 40-year high, but we're not seeing the response. A weaker dollar, well, the dollar's been kind of strong, so that may not be a good case here, but we're not seeing precious metals respond as expected. And today is a really good example of that. Now, if you're on the short side for that, what you'd want to see tomorrow is that this market would trade and close near 20.05 to 20 even. What you don't want to see, and this is a similar situation we had in NatGas, you would not want this closing above 20.65 to 20.75. If it does that on Friday, that would imply a potential explosive move to the upside on Monday. And if it didn't do, if we had that scenario, stronger close, and it doesn't give us that spurt in volatility on Monday, then look for a sideways move. These markets really I find fascinating. And you know something, Mark? What this reminds me of, and especially gold. You remember in 1990 when Saddam Hussein was visiting Kuwait? Now, that's a time of uncertainty. We didn't know what was going to happen. We didn't know how long a potential war could occur. Gold went sideways. It acted like a base metal, not a precious metal. And I feel we're in the same mode right now. So in silver, nothing telling us to be a buyer at the current levels. Unless we get that rally on Friday, then I'd be very cautious on the short side, and a potential bullish setup could be in the offing.
Interesting. Saddam Hussein visiting Kuwait, heading into the Gulf War. An interesting analogy. I didn't expect you were going to go there, Dan. That's why I like having you on the show. You always throw me curveballs. Really quickly, you kind of just touched on this, but I'm going to cheat and bump this up from our listener questions. We had a great question on one of our pro Q&As earlier this week from one of our pro members, Age of Del Aquarius. I thought it was a good one to save for TWIFO today because it is very relevant for this audience. He wanted to know, is there any decent trade around SLV right now? Looks stuck around 20. SLV, of course, listeners, the iShares Silver Trust ETF. It holds the physical, so it's one of the few commodity-oriented ETFs that we don't mind recommending to our listeners. And a lot of our listeners get their precious metals exposure through GLD and SLV. SLV right now, 1876, off another 2%, or about 40 cents today. So he's a little bit off, Dan. It's actually below 20, pretty substantially below 20 at this point.
Yeah.
Anything you want to say for Age or any of our listeners out there who are looking at SLV? Anything intrigue you out there, sir?
Well, you know what's interesting about them? They're tracking the way they should. In other words, the futures and silver futures and the silver ETF, their movements are in alignment. It's a little different with SLV because it doesn't trade 24 hours a day, or actually 23 hours a day like silver does. So it's a little different when you look at the charts. But in terms of general movement, they're in the same boat. I totally agree with his analysis, though. It just isn't doing much. Now, when it comes to SLV, the big deals with that market, what I was mentioning before about 2065 to 2070 as a close on Friday, there it would be 1905 to 1910. If you had a close in that range on Friday, that would imply an up day on Monday, and some volatility as well. But would be interesting if you're looking at that, that's where the futures can come into play, because you get to see the futures, and I think of it as these different time zones. So tonight, when you and I finish here today in the U.S. session at 5 o'clock Chicago time, silver opens again in futures. That's the Asia session. That's Friday morning in Asia. And then we have Europe opening up around 1 or 2 o'clock in the morning, Chicago time. And when we get up in the morning, we get to see what Europe is bringing to us. So if it is slowing down at these levels, if it has gotten so cheap that buyers are willing to come in, we should see signs of that overnight. That's what I would look for. And your SLV, one of the ways to get a feel for what may be happening there, look at those futures. Same thing for GLD. Look at the futures. It'll give you an idea what's happened overnight. So are we seeing momentum going lower overnight, or are we seeing actually buyers attempting to come back in. So I think SLV, his assessment's correct. It's been lackluster, just like the futures. And unless we get that kind of a change in behavior, that 1905 to 1910 type close on Friday, I'd look for sideways to lower prices in that market.
All right, let's see what our options are telling us over here in silver this week. Listeners, again, go to that drop down, go into metals, then precious, then down to silver. You'll see 15,000 for all the noise silver makes, all people asking us about it and people intrigued and interested in silver. It's not a huge options player here, at least in regards to some of the other products over here at CME. 15,500 contracts on the tape this week. Of that, the lion's share at about a 39% of it coming in. The August contract has about 26 days to go. By the way, that front future 2030 right now off about 85 cents or about a little over 4% since Monday's session. Let's go out to that August contract. The vol out there, 28.5. So equities adjacent when we're talking about silver vol right now, similar level to what we're seeing out there in the equities. In terms of skew, the puts last week, 4.7% bid. This week, 3% bid. So coming in a little bit. The calls last week, 1.1% cheap. This week, 2.4% bid. So we almost have an equal smile out there. 3% almost premium on both sides of the skew. So that's a little bit of the market kind of throwing its hands up to us and saying, yeah, we don't know where it's going. It's going somewhere, but we don't know where. But let's see. In terms of action, the most active contract this week looks like it was the 23 calls in August, doing nearly 1,000 contracts out here. They're pretty active all week long. The big day was Monday, about 400 contracts on Monday, 200 on Wednesday. The rest kind of scattered throughout the week. Also had almost 700 contracts going up on the 22 calls. So a little bit of upside call action in August, despite the fact that we are seeing a continued downside. Are you guys on board with that? Would you be buying those calls? Or would you be selling those calls? What are your thoughts here at these levels here, 2030 right now in silver? As we keep on rolling into our next segment, it is time to explore a little bit of the old equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, to equities we go. Pop out of that drop down, go up from metals. You're going to go up a few slots to equity indexes, then go to UX Index E-mini. We're going to hang out in the Russell 2000. First, where we go from there is anyone's guess. Similar paper actually this week in the Russell as well, about 15,000 contracts to what we saw in silver. So kind of a light week, kind of across the board. NatGas not blowing it up. Again, it makes sense. We are heading into a holiday weekend yet again. So maybe some folks getting the heck out of Dodge early and taking their paper with them. Right now, let's see on the equity landscape from a vol perspective. Let's set the table here. Small cap vol, a.k.a. the VIX of Russell 2000, a.k.a. RVX. At about a 33 3/4. That's down about 1.5, almost 1.6 points from where it was this time last week. VIX cash, I said it was pretty similar to what we're seeing in silver. VIX cash, when we kicked off the show, 28.70, down about 3/4 of a point from this time last week. VVIX, so the vol of vol, at about an 89. That's down 10 points from where it was this time last week. That's a key level. Keep an eye on that, listeners. The volatility of volatility is something to watch. When we first saw it break through triple digits a few weeks ago, that was an interesting moment because we really haven't seen that much since the onset of the pandemic. We've only broken triple digits a couple of times since then. When we broke it a few weeks ago, that was the first time in over a year that we had seen that. So can vol of vol remain that low? We shall see. A vol Q, aka the at-the-money vol of the NASDAQ, at about a 33.40. That's pretty much unched from where it was this time last week. So that puts that VIX to RVX spread, so the large cap to small cap vol spread, at about 5.10. That's a little over 3/4 of a point, about 80 cents tighter than it was this time last week. And the VIX to vol Q, so the S&P to NASDAQ vol spread, almost a 5, about a 4 3/4. That's about 3/4 of a point wider than it was this time last week. Makes sense. VIX is moving all over the place, and vol Q is kind of unched on the week, so it makes sense that spread would widen out a little bit. Mr. Dan, a lot of living going on in the world of equities, including today. We had a pretty protracted sell-off going on earlier in the morning. And let's see where we're hanging out right now. We're still back in the sell-off again. And we had bounced pretty aggressively off those levels, got down to around 37.5, a little bit below, I believe, in the S&P, before rebounding all the way up to 3,800 again. And now looks like we are trending back down again. So a lot of living just today. What is lighting up your tape this week, Mr. Dan, in the world of equities?
Well, you picked a good one, Mark. The S&P and actually the NASDAQ Dow and our friend Mr. Russell, they all kind of fit in the same mold. And that is this: from a price behavior point of view, what I look at, what I call behavioral Japanese candles. So I look at what you would see on the floor. The idea that the price action is an indicator of buying or selling coming into the market. If you were on the floor and you could watch the broker's hands, if they were selling with both hands and showing size, well, you know that there's some selling order flow coming in. I believe, and for me, I would see that and I'd look at a screen and I'd say, son of a gun, I think there's a connection. My point behind saying that, I think that's what we're seeing today. 5 days ago, last Friday, we had a very large move to the upside as we finished the week out. And what was interesting about it is what I call a benchmark candle. So I look at how the market moves with respect to that large candle. I look at the midpoint and I look at the low. This is just a Dan thing that we're talking about. But if we go down the way we came up, then we probably are going to have a very stronger move to the downside. We didn't get that. Tuesday it broke. Wednesday, a quiet range to be expected. But today's action, I think, incredibly interesting. We're still the overall price actions inside that benchmark candle. And to me, that creates a bias. The bias would be for a move to the upside. Now, here's the tricky bit. If that's true, do we have fundamentals driving that market higher? And, today we had personal spending up about 0.2%, weakest since 2022. If you adjust it for inflation, it's down about 0.4%. But I think the interesting thing today is the PCE 6-month was at a 6-month low. And, that's the Fed's favorite indicator to look at. And that was at 4.7%. So, is inflation slowing a bit? And that's what it implies. If that's the case, is that enough to give confidence to the market? If it is, then we may be seeing an interim low on this market. So if I'm short, I want to be cautious here. If we're looking for a bounce here in the S&P, that would be a close going to Friday now. We want to see, does this market close up on Friday? And like you said, we got a holiday weekend. Do people even up before the weekend? Does anybody want to go short into the weekend? Has this gotten cheap enough that buyers now are willing to hold a position into a holiday weekend? All those questions, I think, will get answered to some extent based on Friday's action. So in the S&P, we'd want to see that closing above 38.20 to actually closer to 38.50 on Friday's action. That would imply an up move for Monday, because we have a shortened session on Monday. You want to remember, futures continue to trade. They shut down around noon, and then they open again at 5 o'clock at night for Asia's open. So it's an interesting setup potential we have here. But the Dow, or let's go to the NASDAQ. There you'd want to see it closing above 11,700 on Friday. The Dow back up above 31,000 even is where you'd want to see that close. And for our friend Mr. Russell, it would be a close above 1730. We get that kind of action, then the question is it sellers taking profit? Is it low enough to find buyers? and can they follow through on Monday? Now, on Monday, if we'd see a nice strong day up on Monday, even though it's a shortened session, or on Tuesday, it says maybe these buyers are trying to come back in. On the other hand, if we have a quiet range, which wouldn't be surprising on Monday, but on Tuesday, if we don't continue to make new highs, that implies a sideways to lower move. So I think the price action we're going to see in these equities over just the next few sessions could be really insightful in terms of longer term behavior. And one more thing that we want to remember, if we're a buyer here in any of these indices, we're fading the trend. The trend has been down. So we're standing on the tracks watching that railroad or that engine coming down the tracks at us. So we got to be cautious with this. Obviously, you always want to manage risk. That's one of the beautiful things about options. It gives us that ability to do that in a very practical way. But anyways, that's kind of what I'm looking for price-wise as we finish this week out.
A lot to unpack there. Let's dive into small caps first and see what we see out there. By the way, a big week for the Russell 2000. Of course, Friday was the big rebalance, and then Monday commenced the first day of trading with the newly rebalanced, newly reconstituted Russell 2000. An intriguing show we did a couple of weeks ago with the folks at FTSE over there and Catherine Yamamoto. I encourage you to check it out if you haven't, because it breaks down not just how the recon works, but also really there's always some interesting data points that come out of the reconstitution every year in terms of overall trends in the market. And if you are actively trading in the equities, you probably want to pay attention to those. So check out that episode if you missed it. In terms of right now, we're seeing, like I said, the Russell 2000 hanging out a little bit north of the 1700 level, 1705 to be precise. Again, kind of a light week, 15,000 plus contracts on the tape. 30% of that coming in the week 3 July contract. There has about 15 days to go. Let's head out there instead, and that's right at our cutoff, listeners. The vol right now in that contract, almost a 32, 31 and 3/4. So a little bit frothier. Let's see. Where are we in RVX right now? RVX was 33.79. So actually it's a little bit under, 2 points under where we were in RVX out there right now, which makes sense. RVX is kind of a bit of a rolling 30-day metric. You know, every different contract's going to have their own vol out there. In terms of skew, last week the puts 9.3% rich. This week, almost 11, 10.7%. So catching a little bit of a bid out there on the puts. The calls last week, 8.1% cheap. This week, even cheaper, 9.2% cheap. So, and in terms of action, it was actually the calls leading the dance. Nearly 1,000 of the 1,900 calls going up here this week in that week 3 contract. So that's kind of interesting. 1900s, listeners. That wasn't what I expected. Looks like actually a 1900, 1920 vertical went up nearly 600 times this week. So that accounts for a lot of the paper there. 1900, 1920. That's a strange vertical. Very tight. And also 200 points out of the money with 2 weeks to go. That's not exactly a vertical I would be looking at, but stranger things have happened. Speaking of strange things, let's see if we can find a few others in some other product categories. Dan, we have time for probably one more product category before we get some of the listener fun. So where should we hang our hat next, sir?
Well, let's see. Are there any currencies you want to look at? What have we've done metals, we've done energy. Would you like to take a look at some currencies?
We actually do have soybean oil and soybean meal lighting up the light side this week. No FX this week. What do you say we hang out a little bit?
Sure.
A little bit in the ags next.
It's time to get our hands dirty exploring the latest options trades and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, welcome to the ag segment. You're going to pop out of out of equities, right in the middle of the list and go all the way up to the top to agriculture. You're going to slide on over to grains and oil seeds. Then let's see, we have soybean meal and soybean oil lighting it up this week. Soybean meal is the more active of the two, only slightly, about 45,000 contracts on the tape versus about 38,000 for the oil. So I guess we'll hang our hat out there in soybean meal. Not a product we break down a lot, Dan, on the show. So I'm curious for you, ags have been kind of a hot area for a while. They're coming off a little bit now, but soybean meal feeling his oats, pun intended, this week, up 5.5% or 22.5 handles, trading right around 433.90 right now, listeners. Dan, what's lighting up your tape in the world of ags this week?
Well, the meal is one to take a look at. What's interesting is it's leading the soy complex. If you look at the volatility we're seeing in meal versus beans versus oil, and if you're not familiar with this complex, basically what happens is they take soybeans, they smash them up, and the result is you get oil and you get meal. And meal is used primarily as animal feed. It's a very high protein animal feed. We also use it for some of the people who want to eat meat, but they don't want to have meat. Meal is used in some of those products. But it's primarily an animal feed product. Oil, on the other hand, really surprises me. That one, I would think it would track meal. Oftentimes it does. It is not doing that. And that one actually takes us back to that crazy Ukrainian situation where 75% of sunflower oil comes from Ukraine. And, who's been able to plant sunflower oil, and plus how you're going to ship it out of your country. That means sunflower oil is about 10% of cooking oil. All right, now we look at the big picture. Then we got to look at palm oil. Indonesia is one of the world's largest producers and exporter of palm oil. And we saw a rally in soybean oil because Indonesia said, we got inflation, and I don't think we're going to be able to export any palm oil. Well, immediately the demand for sunflower oil and for soybean oil goes up. And then Indonesia said, well, maybe we can export some. So we've seen it soften on soybean oil, but meal, on the other hand, is maintaining this upward pressure. And if you look at the crush spread, which is where you would buy beans, sell meal, and sell oil, it favors crushers right now to continue operations. And, if you look at countries like China, China's protein consumption is up tremendously. People have disposable income. They do eat. As a result, they eat more protein. And it's something I look at. And what you'll see is the consumption of meat goes up. Chicken consumption up 500%. The largest producer and consumer of pork is China. Beef consumption goes up. Well, they have to feed those animals, and that feed is soybean meal. That's one of the things they can feed them. So we're seeing somewhat consistent upward pressure in meal, although today it's slowing down a bit. So on the long side, you don't want to see this trading below 460. We'll finish that. You don't want to see it trading below 460. What I'm expecting for on Monday is an inside day. Oh, sorry, it's not going to trade Monday. On Tuesday would be an inside day between 475, 466, 67, something like that. Be cautious if you're on the long side. This could be getting ready to tip over a little bit. So again, you want to see it staying above 460. And Monday or Tuesday, we're looking for an inside day. In oil, it's at a situation that's different than meal. It's got what I call a false sense of security. It's a potential bullish position, son of a gun. So on Tuesday, if you're on the short side, you don't want to see this trading above 75. If it does, then it could be at 80 by the end of the week. So that's in a different position right now. And Friday also will tell us something about, are people willing to hold a position going into the weekend? I said next Tuesday. I'm sorry, I was talking about Friday. We got one more trading day here. So inside day in the meal on Friday. When it comes to oil, we have a potential trend change on Friday if we get a close near that 75 level.
There we go. A lot to unpack in the world of soybean meal, listeners. How much action is going up in soybean meal? Like I mentioned, 46,000 contracts, so a fairly decent contract. You're talking roughly 3x what we saw there in silver, so it's no slouch. And of that, nearly 50%, 47% going up in the Dees contract that has a whopping 148 days to go. So it's nice, refreshing change from our equities and a lot of other contracts that tend to all front load their paper. Soybean meal going out a ways, going out to December. That contract, that future is at about a 406 right now, listeners. In terms of volatility, how volatile is this product? It's at about a 25.5. So again, it's within spitting distance of some of the equities we were just talking about earlier, also similar to what we're seeing out there in silver. And in terms of skew, we're seeing the puts last week 6.4% cheap. This week, nearly 10%, 9.6% cheap. So puts getting cheaper. Calls last week, 9.1% bid. This week, 9.5%. So calls remaining pretty frothy, and the puts getting cheaper out here this week. That's kind of interesting. Let's see what kind of action was lighting up our tape. Dan was just talking about the levels he's looking for out here in soybean meal. Let's see if the options paper coincides with that. It was the 420 calls in December that were leading the dance this week with about 3,000 contracts. The big day, almost all of it coming on Tuesday, about 2,500 contracts going up there. All of that pretty much opening, and the rest kind of scattered throughout the week. Not a lot of paper the rest of the week. No verticals, or maybe looks like about 2,000 of the 470s also traded on Tuesday, also opening. So it could be a 420, 470 vertical on a little bit of a ratio that went up on Monday as well. Right behind it, we have number 2 most active contract was the 460 calls. They did about 2,100 contracts. The big day for them was Wednesday, 1,100 on Wednesday, and then 600 on Monday, and whopping zero on Tuesday. So when that big vertical was trading, there were no 460s trading, which is interesting, and about 400 today. Then we have about 2,100 as well of the 470s. Again, pretty much all of that coming in the other half of that 420, 470 vertical that went up on Tuesday. Only scattered paper going up the rest of the week. So it was a lot of call-heavy action. If you get to the puts, you got almost 2,000, about 1,900 of the 400. So the par puts going up here in December as well. The big day for them also Tuesday. Tuesday, a big day for soybean meal. A lot of paper going up then. 1,100 contracts on Tuesday, about 550 on Wednesday, a couple hundred today. Pretty much most of that opening throughout the week. So opening puts on the par strike, and it looks like an opening 420, 470 call vertical kind of leading the dance out here in soybean meal as well, which is kind of interesting. I'll have to dig into the size and what they did on that vertical. The could be two very different trades, diametrically opposed to each other, or they could be leaning the same way if they were selling that vertical. Intriguing stuff. You know, it's also intriguing, listeners. It's your questions and your votes in our polls. So let's get to that right now.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your Futures Options Feedback segment. We already cheated, bumped up a question here about silver, but Dan, I want to get your thoughts on our question of the week that is going right now, very much relevant to the audience of this program as well. We're asking people, which asset class do you feel has the best chance to turn positive by the end of the year? We gave you 3 choices: equities, rates, crypto, and then, of course, throwing in there a little bit of the infamous other. If you choose other, though, we want to hear what other asset class you are choosing. Don't just choose other. That's cheating. All right, Mr. Dan, what are your thoughts on our question of the week? Does one of these asset classes resonate for you to turn positive on the year, or perhaps is there another asset class you would prefer?
Well, we have rates. We have
rates, equities, and crypto. And then, of course, you can always suggest another. And also, what do you think our audience is voting for?
Well, if people are optimistic, they're going to be looking at equities. When it comes to rates, if we're looking at rates in terms of yield, for those to be up would not be surprising at all. That's probably the most logical one because of the expected Fed action. And Bitcoin, Bitcoin doesn't know what the hell Bitcoin wants to do. It's really struggling. If you look at this path, actually not that long ago, we were trading above 30,000 at the beginning of this month, and now we're below the magic 20,000. So that one I have no expectations for. I think we'll let that decide what it wants to do. I'm not sure that equities have a reason at this point to give us a super strong rally. That's the challenge we have with the price action that we're seeing. On the daily charts, it's potentially bullish. But do we have the fundamentals driving it? Fundamentals are so important because they do create people's beliefs, right or wrong, but they create expectation. And the expectation of future fundamentals, like I mentioned, central bank action, also has that part of the brew that creates an outlook, creates an opinion. I think for the equities under our current fundamental environment, to see them up by the end of the year would be very tricky because at this point, I don't see fundamental support. Rates being higher because of central bank action, I think we have a very good chance of that. And the Fed has already said they want to be aggressive. This 75 basis point increase we just had, another one's expected. They have used that size of increase in the past. It's been a few years, but they have before. The issue of recession, it's tough. It's tough to be a central bank. At what number? And there will be a number. At some interest rate, it'll cause the market to back off severely in the sense of a recession. In 2003, it was 6.5%. In 2007, it was 5.5%. What number? Nobody knows. And that's the tricky bit. So I think it's going to be difficult for our equity market to give us that kind of showing by the end of the year. The only other market that I wonder about, and that would be the dollar. If all these things that we're just talking about happen, that, the market stays soft because of lack of confidence in terms of inflation and the potential for a recession, and Ukraine war continues, then where does people put money if they want to have some safety? And I'm thinking globally. I can think of a money manager in Germany that my path crosses once in a while. I have a feeling what he's doing, it goes back towards that U.S. dollar. In times of uncertainty, people want to put their money where they feel it's somewhat safe. And if our interest rates are going up, that becomes more attractive to outside capital, which means as those euros get converted to dollars, it puts more upward pressure on the dollar index. So I think that's one that could stay fairly strong. We talked about the metals. I think that's 50-50 precious metals in terms of their behavior. If our economies turn on, if the virus situation is abated and China gets turned on economy-wise, then copper is a market that I think could be very strong going into the end of the year. But that's a big if those kind of things happen.
All right, a lot to unpack there. Right now, let's see how our audience is feeling. This just went live a little bit earlier in the day list, right before the option block, so it's still early days here. We're a little late on the trigger for the question of the week this week. We had a lot of stuff going on. But right now, it looks like our audience is picking equities, Dan. Nearly 41% followed by rates 36.4%, crypto 18.2%, and other only 4.5%. So they're feeling equities could go positive. I'm with you, Dan. That's a pretty steep hill to climb, but I guess they feel
I hope
that.
they're right.
Yeah, I think a lot of people do. But yeah, that would be an interesting one. That's interesting for our audience too, because just a week ago we were asking them about whether or not they were waiting. The S&P had hit that 3750 level and actually broken through it, that they had talked about buying earlier in some of our polls. So we ask you, are you buying now or are you waiting for lower levels? 54% of you said you're waiting for lower levels. So these are interesting, somewhat diametrically opposed results, unless you interpret it as, hey, people are waiting for a sell-off lower now, and they're going to wait till they hit that level. Then we're going to bounce from there, and if that's the case, then we have an even steeper hill to climb before we can close positive on the year. But either way, a lot of uncertainty, even in our audience, it seems, when it comes to what's coming next for all of these assets out there. All right, Mr. Dan, that music means we've done it. We've come to the end of another epic journey through the world of all things futures options. We've touched on many different complexes, many different products. But before we go, sir, if there's anything you want to leave our audience with, any interesting nuggets or highlights that we didn't get a chance to talk about on the show, now is the time, sir. The floor is yours.
Well, I guess when on the equity side, what's interesting is that the line between looking at the market reality and looking at our portfolio. You know, sometimes it builds in that bias that we're looking for that positive market movement, which I hope it does. You know, I'd like to see it give us a rally, but we still have some of those uncertainties out there. It's going to be interesting to see how the market does digest that information as we go over the next few months. And plus we have midterm. We have a few things going on that may stimulate this market one way or the other.
There you go. And Mr. Dan, if folks want to check out your daily videos and see more of your content, where should they go? What should they do?
Just dangramza.com. There's a free video. I do it every day. And it looks at a variety of 22 different markets, 6 different sectors. So the intent is just to give you an idea of how someone's approaching these. There's buy and sell levels, which are for me. I'm not suggesting buy and sell recommendations for anyone else. There's a course there as well and a more advanced video. But if you haven't looked at it, take a look at the free video. If you're only looking at equities, you may find that there are other complexes that you find interesting. And one of the places to begin is just watch it. And see, and you can look at the videos for the last 4 or 5 years, I think. So if you want to go back in time and say, all right, what did he say when this happened? You can do that as well. So I guess that's one spot. And if you have any questions, there's a help section there. Just put something in there and that will eventually get to me.
There you go. Check him out. Dan Gramza, GRAMZA.com is the place to go. Great videos, great insight on all these different asset classes. Check them out over there if you want to learn more. And of course, you know where to go to learn more about all these futures options products. CMEgroup.com/TWIFO is the place to begin your journey. Then, of course, you could branch out from there. A lot of great educational and analytical material available for you over there at CME Group. And last but certainly not least, you know where to go to learn more about all things small caps. FTSE Russell, FTSE Russell.com is the place to go to kick the tires and light the fires. Recon finally behind us now, so you can see some interesting data. All those break points we were talking about earlier and interesting analytics coming out of the recon. You can check all that out over there, FTSERussell.com. Give them a follow on the old Twitter while you're at it, at FTSE Russell, FTSE Russell, all one word. That's going to do it for us on the network today, listeners. But don't worry, back again tomorrow, noon Central, 1 p.m. Eastern, to break down the mad week that was in the realm of volatility on Volatility Views. Then, of course, for all you cool kids in the Secret Club, back again after that with the folks from Shift Search to break down the wild week that was from an unusual activity perspective on Options Oddities. And we're off again on Monday for the long holiday weekend. Have a great 4th, everyone. And we'll see you back here next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.